In order to become a profitable trader and sustain consistency in our trading, we must maximize our gains while minimizing our losses. It's vital to have larger, profitable trades. And while we do lose, because we are going to have losing trades, we just have to make sure that they're small and as minuscule as possible. This video is going to show examples on the chart on how we could do this, along with the psychology behind different trading setups that we're going to take in the market. All I ask is if I provide any value to your trading, I would appreciate a thumbs up on this video. And I'm also going to link my Instagram in the description below at Ameritrade. I definitely recommend following this. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. Link is in the description below. You're missing out if you're not following it. But now, let's get right into this recap. The case in point that I want you to get out of this video is that no trader should ever have a large losing trade. Your goal and your primary objective as a trader, whether you're a swing trader or day trader, is to protect your capital. My mindset is always capital preservation over capital growth, because if you preserve something, it's going to automatically grow in due time. So never ever have a large losing trade. Now, if you have a large losing trade, two different things can happen. The first one is you're either over leveraged, so you're risking way too much, and the stock starts reversing on you and you take a huge loss. And the second one is that you do not obey by a stop loss. To prevent you from having a large losing trade, you have to implement a stop loss, whether it be a mental stop loss, meaning when a stock goes below a level, I'm going to get the heck out, or a physical hard stop loss where a physical order gets put on the market. I trade options and I prefer using a mental stop loss, but that requires a large amount of discipline that you have to use to obey by that rule that you created and to get out when the stock is not moving in your favor. Now, this is kind of a weird analogy, but it makes total sense. Picture you building a sandcastle on the beach. Slowly putting sand in the sandcastle, building it up, you're making it a huge thing. Think of that as small trading gains. They keep adding up. They see your account's growing, and it's getting larger and larger like the sandcastle is on the beach. You don't want a huge wave coming away and swiping out your full sandcastle and completely destroying it. It's the same thing with trading. You don't want to have a large losing trade wipe away all your small gains that were consistently, adding up. If you have, let's just say, trades where you're making $200, $300, $400 in your account, and you look at your journal and you take a losing trade for $5-6 grand, that is a big no-no. Your losing trades have to be much smaller or less frequent than your winning trades, or else you're never going to see growth in your account and you're never going to see any type of return in trading. So because of this, your trade should end in one of four different ways. The first one is a small win. This is obvious. A small win, you once thought what could have been a bigger win, but the market may be lacking follow through. It's having a hard time moving in your direction. So because of this, just get out. You have profit, protect them when you have them. If it's not working out, or it is working out but not in the way you anticipated, maybe the market is stalling at resistance, stalling at support, or at a supply or demand zone, just get out, protect yourself. If it keeps continuing in your direction, good for you. Give yourself a pat on the back. You were right on your analysis, but you're playing defensive and your goal is to preserve your capital. Here we have Tesla, and it was selling off right into our demand imbalance at 661. We look to buy the market or go long at demand. So let's say we take this long at like 667, stop below the low, and we're targeting the supply imbalance at 690. Now this is something which is very key. Every single trade you put on has to have an area where you're going to exit if you're wrong, and it has to have an estimate or an area where you're going to look to sell if you're right on your analysis, where the market could either stall out or it could be an area where it could potentially reverse. So for me, if I'm taking this trade long, my first profit target is going to be VWAP, and my second profit target is going to be at the supply and balance. It's just gauging participant interest at each of those levels. So I'm long down here at 665, stop below the low. If I fast forward the couple of candles, this trade immediately starts working out, but it's somewhat of a slow grind up, and price starts stalling out right at the 675 area right here. Now this also lines up with this little resistance area. It's a pivot high as well before the lower day sell-off into demand. So two different things can happen here. You could either recognize that and you want to protect yourself. I'm a very defensive trader. I don't try to hit home runs. If you keep swinging for home runs, I promise you, you will strike out, and you're eventually going to blow up your account. Go for small base hits. They add up in the long run. So because of this, maybe if I see the market coming up into this resistance zone and the next candle starts giving a little trouble after it broke the high of the previous, I could get out for a small win when I have it. Maybe the market really just isn't ready yet. I'm a couple of points from VWAP. There's no reason to try to squeeze a couple points out, some more juice out of the lemon. Just sell when you have profit. If the market starts pulling back, you could always re-enter. And the second way that your trade should end is a small loss. Now, this is where trading becomes emotional and it becomes a big mental game, because we're designed to want to win all the time. We're designed that losses actually hurt us mentally and physically. So a lot of traders cannot accept a loss, and that actually hurts them in the long run. So I'm okay with taking a loss as long as it's small and I did protect myself. What a small loss tells me is that I mistimed the market. It's as simple as that. It's not ready to move with me. I got in at a point and the market's not in agreement with my entry and with my trade. So it's not ready, and I'm always going to sell if I can for either that small win or that small loss. And I could always look to re-enter at a better opportunity with better risk to reward. A lot of traders put their head down. They get out of the market for a small loss. They put their head down and they don't realize that when there's the most pain might be the best opportunity to gain something. So you put your head down, you ignore the full larger picture of the market, and you don't realize that maybe the best setup is right in front of your face at that very moment. You could always look to re-enter, and that entry might have been at a better opportunity with better risk to reward, where your risk is tighter and your reward or your profit target is going to be much higher. Same exact example with Tesla, but let's say we didn't sell for a small win. We're holding this pullback and we have a small loss now on our hands. The best trades for me, now this is where everybody becomes different. The best trades for me usually work right away. And if they don't work out right away for me, I get out because I didn't enter for my strategy and for my edge at the proper time. So I'm okay with taking a small loss. Example, price is coming down. This trade never hit my profit target. It's not really working out in my favor, even though it's strong uptrend. We're bouncing off of demand. But let me just get out right now because it's not ready. The fruit's not ripe yet. I picked it off the tree a little early. So the market did start coming down, and let's just say I got in over here around the 667 area. I would be down about 5 points on Tesla, and 5 points is not a lot, but I'm just protecting myself a little bit. My stop was below the low. However, I'm just reacting to what the market's giving me, and it's just not ready yet. So I got out, and this is where it's always important to look to re-enter, because at the point that I exited might have been the best time for me to re-enter. We double bottomed right at this demand zone. I could have re-entered again once we broke over the 665, 667 area, stop below the low, because now we have a double bottom put in. It's a stronger area. Our risk is more defined now because this becomes a major support level inside of a demand zone. I take the trade long, and look what happens. We start stalling out at the 675 demands resistance zone. We could either sell for a small win, or every trader is different. They have different personalities. So this is really going to come down to what you see, your screen time and your experience based off of your personality. Are you able to hold on to a trade if it's not showing results right away? Are you able to hold on to a losing trade if it's not working out right away? It really depends on your personality and how you see the market and how you trade. So yes, we're stalling back at this resistance zone again, but let's just say for this example, we give it a little time, we let it play out, and we wait for price to come down, which it never did. Now, boom, it hit our first profit target. Now, the key is gauging participant action. Yes, we started to stall at this VWAP, and I probably would have scaled some of my position here, but we pulled back. We're still maintaining higher lows, and this thing eventually came back over VWAP and held pretty much the full around 10 o'clock, 11 o'clock. And eventually, if we were in this trade, it was maintaining higher lows the whole day, hit our target at supply zone, and this could have been a small losing trade, but because we looked to re-enter for a better opportunity, this trade could have turned into a big winner. And that brings me into the third point, which is a big win. This is probably the most important one. This is something that a lot of traders do not understand, and a lot of traders don't have big wins because they're too emotionally attached to the market. They're too emotionally attached to the specific trade. You have to time the market right. If the stock starts pulling back on you and you get scared, your emotions are all over the place, you're going to get out of the trade. And if you look at the overall bigger picture, for example, of this Tesla trade, a little micro pullback shouldn't have scared anybody out of the market. It shouldn't have made them give up any gains. It shouldn't have even made them sell their position. We're still maintaining, higher lows. We're still maintaining this strong uptrend. So one thing I want to say here is that no one plans for a big win. It's just something that happens. A big win was actually at one point a small win, but it's the trader themselves, it's the operator that makes a small winning trade turn into a big one. It's like riding the wave, riding the trend. It's like a snowball effect. You kick the snowball down the mountain, what's going to happen? It's going to accumulate more snow, and a small snowball is going to turn into a big snowball the further it goes down, riding the hill down and riding the trend in a stock perspective. So a big win, no one really plans for one. It just happens by you managing the trade properly and turning a small one into a big one. Another perfect example of this was on SPY last week. So we had the supply imbalance. Price was selling off into the supply. We rallied. We tagged this 3897 supply zone. It's a valid area to short SPY, short the future contract, whatever instrument you're looking to trade. You stop either above 3900, above the supply zone, depending on your risk tolerance. We're in this trade short down here. And boom, the market immediately starts selling off. That's a 30-point sell-off. To me, a 30-point sell-off with not one green candle is a home run. So now I have you could call it a small win because I'm going to show you what happens overall in the bigger picture. So right now, this might have been a small win to me. We're at this demand imbalance down here at 3874, but there's really no signs of buying coming into the market. We're failing to even break above the previous high. So we're still making lower lows. This thing eventually starts selling off. And if we looked to either A, scale out maybe 50 or 75% of our position here, we still would have had some contracts open for a larger sell-off. But if we sold the full position here at demand with no participant engagement to the buy side, this could have been a small win compared to what we would have juiced out of the market if we did capture, this full 80-point sell-off, almost 100-point sell-off to the downside. So now that we're below this demand zone, it becomes completely invalid. And then look what happened. The supply that formed down here, where we actually formed supply inside demand, we rallied right into, and a nice end-of-day sell-off to finish off that day. So that's how you turn a small win into a big one. You just let it ride. You sell when you need to sell some of your contracts. Keep riding the trend. No reason to panic. No reason to sell. Look at the overall bigger picture. For me, maybe focus on a little higher time frame, maybe a 15-minute or a 5-minute instead of a 1-minute. Just do what works for you. Ride the trend. That's the biggest point I want to make here. And now the last point is an obvious one. It's break even. It's the same thing with a small loss or a small win. Just recognize that the market isn't ready and exit what you can. I don't care if I break even. I don't care if I take a small loss. I don't care if I take a small win. I just do not want to have a large losing trade. It will completely wipe out your career. It'll completely wipe out your account, and you're never going to live to trade for the next day, account-wise, market-wise. So please, if this video, you take one thing out of it, it's just to avoid taking a large losing trade. Do not over leverage yourself and preserve your capital and play defensive. Believe me, I've been trading for many years now. This is something that has helped me tremendously. So I hope this video helped. If you learned something from it, I'm going to end it here. Just please smash that like button, share this with other traders, subscribe to my channel. If you want to learn more, make sure to check out my website. I offer a very in-depth educational course, which comes with access to my Discord. But other than that, I'm going to wrap it up here, and I'll see you all at the next video. Peace.